This is John Shealy with the Traders Country Club. This is our video of the day. You hear a lot about price resistance among technical traders, and it generally is, as you know, a price level that as the market rallies and it sets a high, there's a reversal. Basically, buyers run out of steam. And as prices reverse, they create this price level that the market was unable to move above during that first rally. That creates a price resistance. Now let's see what would have happened to a trader over many months if they bought just because the market exceeded previous price resistance. So you can see that's what happened here. Let's see, during the day, someone says, well, I think I want to buy here because the market broke through that previous resistance. Let's take a look at this in April of 2009. Notice it's starting to move down. In other words, if you bought just because of that, during the life of your trade, you're losing money. You would have had to then ride through the correction that you hope is going to be a bull market. Let's take a look at a few more charts here. Oop, we did it again. Here's this resistance. We've moved up. So now the question is, all right, you're long. It's broken resistance. Let's see what would have happened to you as you held this position. You're doing pretty good. Look here. Automatically, if you bought, right now on this close, you are underwater again. So during the next 5-6 days, the market tried to rally and did okay, but it came back. So that's my first point. When you look at buying just because a market broke previous resistance, it's not uncommon for the market to be reversing and put you in underwater, losing on that open position for a short period of time. Let's move back and forward. The bull market's moving again. All right, let's take a look. We know where our price resistance is right here. Let's see what happens as the market moves forward. Not yet. Now it does. All right, here comes a new level of buyers. Here they come. Broke resistance. Let's take a look at what happens thereafter. We're doing pretty good. Now look at this reversal. Once again, if you bought here, within 2 weeks, you're underwater again. So you have to ask yourself, as you look at all these charts, in fact, and you can see in this, and this was a deep reversal. So let's say someone hung in there. Here it comes. Here's our price resistance. This is a stock that's moving up. There we go. Somebody comes in. Here's resistance. Poorly drawn line. Somewhere in here, if they bought on the opening, let's see what they've got. Sure enough, slight dip. They would have been underwater at least for a day. It's starting to move back. Now we're back in gear, and you can see within a short period of time, again, it's starting to set back. That's what the purposes of this video is that buying just because a market breaks support or resistance is a very poor way of entering the market. Now here's a particular resistance area, and as you can see, I'll put this line, traders who may have acted on it in these days, you can see what happened to them. Down it came again. It's not the way to trade the markets. How about here? Here's a nice area. Once again, within in this particular case, less than a week, you're underwater. Buying breakouts on support and resistance, daily charts, is not a way to trade these markets. And yet you hear it all the time that all these books say that's you got to watch support resistance, got to watch support resistance. But if you enter on that basis, don't be surprised that from time to time you get breakouts and they frequently reverse on you. This is John Shealy with the Traders Country Club.